Hey, good afternoon, everybody. Yeah, last week we were saying that we were looking at the buy side of the market. Unfortunately, our recommendation to buy crude oil was missed last week by about 8 cents, and then we saw this nice move higher. We also had an order through the weekend to sell it on a test of $80, really just risking above this high of, I believe, 82, so we were risking the 80.90. And we did get stopped out for a $1,000 loss on today's breakout. So we took out not only the June high, but a lot of these moving averages here. This is your 100 and 200-day moving average. A close above this is going to be very supportive technically, and this market is currently in an uptrend. So at this point, if we do get a retest down to these 20 and 50-day moving averages, we will look at the buy side again, unless something else is happening in the outside markets. But you know, it's interesting. We've had a couple consecutive weeks of very bearish fundamental data for the crude oil, and the market's rallying regardless of that data. The equities are probably the main reason why we're seeing this run. The equities took out their June highs, very similar to how crude oil took out their June highs, so this is just following on a piggyback of the equity trade. And it's interesting, they're saying that crude oil and the stocks are up on economic optimism. And if you read the news wires, why is the dollar down? Well, the dollar's down on fears that the economic recovery is going to start to stall. So they're selling the dollar for the opposite reason that they're buying crude oil and equities. So that's a little confusing there. But bottom line, as the dollar is going down and equities are going up, the energy market's going to go up at the same time. So we're going to follow the trend here and look to buy the dip.